Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. I'm on the web at elevationfinancial.com, as well as pretty much every social platform you can think of. So feel free to reach out anytime. You can find me there. Today, we're going to talk about what is a normal down payment for buying a house. So maybe you're thinking about buying a house. Maybe you're unsure how much you need to save for a down payment. That's what we're talking about today. Down payment is kind of one of the most significant factors in buying a house. It can be a kind of an obstacle sometimes. 20% is the common wisdom of what you're supposed to save up, but is that really always the case? We'll talk about that. Can you get away with a smaller amount? There's some myths, some pros and cons of different down payments, and whether you're a first-time home buyer or maybe you're upgrading, you want to understand your options for down payments. That'll help you make an informed decision and plan for the right plan for your situation. So let's talk about just down payments in general. Again, it's the initial amount you pay up front, and this is going to reduce the mortgage amount you'll need to borrow. So a larger down payment means smaller loan and lower monthly payments and potentially better interest rates as well. So it also demonstrates commitment to home ownership. Lenders really see a higher down payment as a sign of financial stability and responsibility, and that can make you a more attractive borrower as well to lenders and helps you build more equity in your home. So how much should you aim for when you're saving for a down payment? So here's some factors to think about first when you're determining your down payment. There's several factors. There's a traditional rule of thumb, which is 20%, but it may not be feasible or really necessary for everyone. And so first, you want to look at your financial situation. Assess your situation, including your income, savings, debts. Look at your monthly budget. Look at how much you can comfortably allocate toward a down payment without compromising your financial stability. For example, you don't want to drain your emergency fund to buy a house. If you need to go with a smaller down payment to preserve your emergency fund, that's a reasonable option. Also, look at mortgage requirements. Different lenders have different requirements for down payments. Some might require a minimum percentage. Others might have more flexible options. So research and compare lenders to find the right ones that align with your financial goals and have the right terms for you. Home price and location, of course, play a part. The price and the location of the home you want to purchase plays a significant role in your down payment because higher priced homes obviously is going to lead to a larger down payment. Also, certain areas might have specific loan programs or assistance options that can help you reduce the upfront cost. So, home price and location can be a factor in those ways as well. Also, the loan type. The type of loan is going to impact your down payment. Conventional loans typically require a higher down payment, while government-backed loans like FHA can have more lenient requirements and often lower requirements for down payments. So that'll help you determine kind of what's ideal for you. So you want to make sure it aligns with your financial situation, your goals, and the requirements for your specific home purchase. So let's talk about the traditional 20% down payment myth. It's a pretty common belief that a 20% down payment is kind of the gold standard when it comes to buying a house. And that misconception has led, many people to believe they need a huge down payment before they can even consider home ownership. So a 20% down payment does have some advantages, but it's not the only option, nor is it always necessary. In reality, the average down payment for home buyers in the US is typically lower than that. According to data from the National Association of Realtors, the typical down payment for first-time home buyers was 8% in 2023, while the typical down payment for repeat buyers was 19%. So first-time home buyers typically were in a lower range of down payment percentage. The 20% down payment myth originated from the conventional loan requirements set by Fannie Mae and Freddie Mac, which are two government-sponsored enterprises. These entities typically require a 20% down payment to avoid PMI, which is private mortgage insurance. However, there are other loan options and programs that allow for a lower down payment to still give you affordable financing. So here's some different loan options and their down payment requirements. So conventional loan, we've talked about. Conventional loans are not insured or guaranteed by the government. They typically require a down payment of 3% to 20% of the home purchase price, depending on the lender's requirements and your credit score. FHA loans by the Federal Housing Administration are government-backed loans that offer more lenient requirements, and they can make home ownership more accessible for first-time buyers. FHA loans require a minimum down payment of 3.5% of the purchase price. There's also VA loans from Veteran Affairs. They're eligible for veterans, active duty service members, and surviving spouses. And these loans do not require a down payment. There's also USDA loans from the US Department of Agriculture. They're designed for low to moderate income borrowers in rural areas. And they also offer 100% financing, which means no down payment. So these are a few examples of loan options. And of course, you want to research and compare lenders to find the best loan program for your specific financial situation. So, what are the pros and cons of a larger or a smaller down payment? So, a larger down payment can have advantages. So, some of the pros are lower monthly payments. A larger down payment means smaller loan amount, which of course results in lower monthly mortgage payments. Also, better interest rates. Lenders often offer better interest rates to borrowers with larger down payments because they see that as less risk. Also, avoiding PMI. Private mortgage insurance or PMI is typically required for borrowers with a down payment less than 20%. And so making a larger down payment can help you avoid that cost. However, I want to note that PMI is typically not very expensive. So it shouldn't necessarily be avoided or feared at all costs. It's just something that's, a small add on. So some of the cons of a larger down payment: you tie up cash. If you put a large amount of money toward a down payment, you've got less cash available for other things or emergencies. Again, going back to the notion of don't drain your emergency fund just to put a large down payment down. You want to make sure you keep cash on hand. It can delay homeownership. If you're saving for a larger down payment, it might take longer. It might delay your plans of buying a home. There's also opportunity cost. You might consider the potential returns you could earn if you invest the money elsewhere instead of putting it toward a larger down payment. So you got to weigh that against mortgage interest rates as well. So again, weigh the pros and cons, determine the right balance that meets your specific situation. So there are some programs that can help you with your down payment. Again, FHA loans, we've already talked about. That can help you with a lower down payment. And FHA loans specifically can also be attractive to those with lower credit scores because the FHA credit score requirements are more lenient than other programs. There's also a conventional 97 loan. This loan program allows for a down payment as low as 3%, and it can be a viable alternative to conventional loans that might sometimes have higher down payment requirements. There's also down payment assistance programs. Many states, cities, and nonprofits might offer down payment assistance programs to help qualified buyers cover part or all of the down payment and the closing costs. So search for the phrase down payment assistance programs along with your state or your city, and that'll help you find resources specific to your location that might help you with down payment assistance. So how do you save for down payment? This is, again, the biggest obstacle to getting into a home for most people. So first, you want to set a goal, determine how much you need to save, set a realistic timeline for achieving that down payment goal. Create a budget. I'm a big fan of budgeting, as you know. So create a budget that gives you room to carve out regular savings toward that down payment. Also cut back on expenses to make more room to redirect toward your down payment. Automate it. Automate transfers from your checking to a separate savings account dedicated just to the down payment. And that'll help you save consistently without manually having to rely on doing it. Automate it, automate it, automate it. That will help you. Also, potentially up your income, even temporarily. Consider taking on a side hustle or freelance work to, increase your income and accelerate that savings, even if it's just temporary. And, reduce debt as well. Pay down high interest debts quickly if you can to free up more money toward down payment, and you'll pay less in interest and give you more to go toward your down payment. So stay focused, and those are some ways to save up for a down payment. So also tips for lowering your down payment: shop lenders, compare lenders and their down payment requirements, find the one with the best terms, negotiate the purchase price, work with your real estate agent to, look for negotiate a lower purchase price. That can help lower the down payment because the overall purchase price is down, obviously. Also, seller concessions every now and then, depending on the market. The real estate market varies, but sometimes you can get seller concessions toward things like closing costs or down payment, and that might be a possibility in some cases. So again, you want to try and determine the ideal down payment for you. It's not a one size fits all. It depends on your situation, your loan options, home price, location, personal goals. 20% down payment can be ideal for some, but it's not the only option. So, again, look at your specific circumstances, explore the different loan programs, and look for one that aligns with your specific situation and plan accordingly. So I hope that helps you navigate kind of the options for down payments and what some of the options might be for you. All right. As always, you can find me on the web at elevationfinancial.com. You're welcome to reach out and ask me a question, or feel free to book a consultation if you're interested in potentially working with me. So again, that's elevationfinancial.com. Thanks everyone for joining me today. Have a great day. We'll see you next time.